If you had to pick just one major theme driving markets in 2026, I think it would have to be the AI boom. Companies are spending billions and billions of dollars building out their own compute capacity, buying chips, and even training models themselves. This spending has been a huge source of stimulus for the US economy, and it's helped the economy and stock market ride through a lot of geopolitical tensions thus far in 2026. So, how concerned should we be that cracks are starting to form in this boom? So, what we're going to cover today is one, why does it matter? Why do we care if the AI trade starts to slow down? And then we're going to go through four of the big reasons why I think cracks are starting to form in this trade. Now, if you took any one of these reasons by themselves, it might not be too concerning. It might be easy to explain away. But all of these things happening at around the same time sort of raises my antenna on the increased risks that we're currently experiencing. But let's start with why this matters. Reason number one, the S&P 500 is highly levered to the AI trade. So what I've done here is I have taken the top 10 names by weight as of a few days ago in the S&P 500. And as you can see, 9 out of 10 of these names are directly tied in to the AI trade. Now, the one holdout happens to be Berkshire Hathaway. So Warren Buffett has largely stayed out of this. I know he's not sort of running the show anymore, but it'll always be associated with him to me. And then you might point out Apple as well, but I would argue that they are directly involved in the AI trade by largely deciding to stay out of this spending, despite being a tech company that easily could have pursued some of the same things that Amazon, Meta, Microsoft, etc. are doing. So, the top 10 names in the S&P 500 by themselves make up nearly 40% of the index. So, we're talking about a very concentrated index. And again, as I said, 9 out of 10 of them are intertwined with this AI trade. And again, I stopped at the top 10. So I have not here on this list is a lot of AI names such as AMD, Oracle, Intel, Lam Research. The list goes on and on. So over half, I think that's a conservative estimate, over half of the index right now by weight is directly tied up into this AI boom. Second reason, the AI investment boom has provided major stimulus to the US economy. I mean, just look at this CapEx chart here on the left. It's Meta, Alphabet, Microsoft, Amazon. They are collectively spending hundreds and hundreds of billions of dollars building out data centers and compute capacity. Now, as you can see, Meta is doing a lot of this and we talk about the cracks, you may have noticed on the list that one of them does involve Meta. So we'll get to that a little bit later. But here I have a quote on the right. This was a really great piece. I posted it on LinkedIn. And Juhi, what she estimated was that about 25% of growth in the US economy right now is directly coming from the AI trade. And even more interesting to me was that is contributing roughly the same amount to growth as consumer spending did in the first quarter of 2026. Now, I've said a bunch of times on these videos how important consumption is to the US economy. It typically makes up 70% of US GDP. So right now, this AI boom is on par with the impact from consumer spending. It just goes to show you how massive this has been and how big of a form of stimulus this has been. So if we start to see cracks and we start to see a slowdown, we might start to see a slowdown in US economic growth. So let's get into the four cracks that I think are starting to show. Number one, we have OpenAI's terrible leaked financials. Now, to be clear, these were leaked financials. They were verified by a multitude of sources. A multitude of reliable sources vetted these, and they seem to be real. But I just want to be clear: these were not released by the company. These were leaked and verified financials. And what you saw was not a very pretty picture. So in fiscal year 2025, the operating loss was nearly $21 billion. $21 billion. For comparison, I believe WeWork's largest operating loss was $5 billion, if I'm remembering that correctly. So OpenAI is losing ton, a ton of money. It's called into question if this consumer-focused strategy that's being pursued by OpenAI or Anthropic is even economically viable. Are they even going to get to the point where they can run these products and run these models where they're actually making money? Right now, if you go in and you type anything into OpenAI or Claude, you're actually costing the company money. So I don't want to speculate too much on these again because they are leaked, but this was sort of an eyebrow raising moment when people saw a $21 billion operating loss for OpenAI. Reason number two, we're going to stick with the OpenAI theme here. Sam Altman wants a bailout. I mean, an investment. So there's been a lot of talk about the government potentially taking a stake in some of these AI companies. And now, when it comes to OpenAI in particular, they've flirted with this idea for a few months at this point. So, OpenAI's CFO in November of 2025 said on a panel that the government could operate as a financial backstop for AI financing. And then recently, I believe at the beginning of this month, OpenAI proposed transferring a 5% stake to the federal government at their $850 billion March 2026 post money valuation. So I think there's two ways you could view this. OpenAI and Sam Altman are philanthropic by nature, and they want, the US citizens, consumers to have a piece of OpenAI. They want the taxpayers to benefit from OpenAI. What I think is more likely is, they see the 21 billion operating loss in fiscal year 2025, and they're looking for a bailout. Now, your opinion may differ than mine, but I would say no company that is doing really, really well and has a bright future or thinks they have a bright future ahead of themselves is necessarily going to be looking for government investment. If you just look at the Polymarket odds, the last time I updated it, they had it at about a 30% chance that this happens. So it still doesn't seem super likely. But just the fact that Sam Altman is looking for what I would consider to be a bailout, again, is just another thing that raises a red flag. So, red flag number three, Meta is selling its data center capacity. Now, this was another leak. I don't know if it's been confirmed yet. We might get more information by the time I record this to it being released, but it was reported, I believe, by Bloomberg that Meta was considering or was moving towards and had made hiring decisions around starting a cloud business, just like Amazon has, to start selling its excess compute, its excess data center capacity. So remember that chart of the CapEx that I showed in the Meta, I believe they were the blue bar? Meta has invested a ton of money, hundreds and hundreds of billions of dollars, building out its data center capacity. And now the idea was these companies need to build this out to meet their own internal demand, and they don't want to be constantly buying compute from outside sources. But this could be a sign that they are overbuilding, they are over investing. The general thought has been the demand is far greater than the supply, but this could potentially be a sign that this is a miscalculation. And the market loved this announcement. So Meta stock jumped, I believe it was 9 or 10% on the announcement or on the leak or on the report from Bloomberg. And Zuckerberg had previously said in a shareholder meeting that if they got to the point where they felt like they had overbuilt, then selling the capacity was an option that they had. So this is something they've talked about publicly. I don't believe they've confirmed this yet. And this introduces other questions. So are other hyperscalers next? Are all of these other big tech companies that are building their own data center capacity soon going to announce that they're selling it? Is this the end of the compute scarcity? So are we talking about a supply and demand thing? Is the demand far less than we thought? Or did we overshoot the supply? Or most likely some combination of both. So it's going to be a one-off thing where Meta internally isn't generating enough demand for its compute? Or has every hyperscaler built too much compute for their own demand? So if all this supply of compute starts to come on the market, then these CapEx expenditures aren't going to hit the ROI that they expected. And investors are already starting to get nervous about that. And then when you think about the demand side, so OpenAI, Anthropic, some of the smaller labs, the hyperscalers themselves, those are the buyers of compute. There's not a ton of buyers of compute. So if all of these hyperscalers go into sell mode, they're going to be selling to an increasingly shrinking pool of potential buyers. So again, another red flag. In and of itself, you could easily say Meta's the only one who overbuilt, but as we start to look at the surrounding landscape, the other red flags that I'm mentioning, this starts to become a concern. And the fourth and final reason, so is the circular AI financing ecosystem dying? So this system has gotten a lot of attention recently. A lot of famous short sellers, I believe Michael Burry being one of them, have come out and said this is a reason to bet against the AI trade. And that is the circular financing that occurs. So we'll start here in the top right arrow. You have companies, I'm just using these companies as examples. They are involved, but there are other, it's not just these companies. So NVIDIA invests billions of dollars into OpenAI. OpenAI then signs huge contracts promising to pay Oracle for that computing power. And then Oracle takes those contracts and borrows money and uses it to buy NVIDIA's chips. So NVIDIA gets money from Oracle buying their chips. NVIDIA turns around, invests more money into OpenAI. OpenAI signs huge contracts promising to pay Oracle. Oracle borrows more money, and around we go. And recently, we've seen some signs that this arrangement is slowing down or dying. So NVIDIA recently backed out from some of their investment pledges. They had initially pledged an additional $100 billion into OpenAI. They scaled that back to, I believe, $20 billion. Then we had OpenAI's financials leaking, which we talked about. And that made investors nervous that they were going to be able to then pay Oracle. So we saw Oracle's CDS spreads widen as the credit market started to waver. And then finally, as I mentioned, some of these famous short sellers, Michael Burry being one of them, have started to demand clean revenue from the industry. Now, Michael Burry has made a lot of calls since his famous housing call, so it's unclear how much weight this will have. But this circular financing arrangement is starting to gather more and more attention. And if investors decide this isn't going to cut it anymore, it's unclear how some of these companies will be able to pivot out of this cycle. So, do I think the AI trade is ending anytime soon? Not necessarily, but I would like to point out these four cracks that I believe are starting to form. As the S&P 500 and the US economy currently sits, we are tied in very tightly with this trade. So if we do start to see these cracks forming or spreading or more things that I can add to the list, it might not be the best for the US economy and stock market as we move forward months and years from now. I hope you enjoyed this video. I hope you learned something new. If you did, it would be awesome if you could just hit that subscribe button very quickly. We're moving on to the next milestone. And I hope you have a great week. And I will see you back here next Monday for another Macro Monday video.